Good morning, and diving straight into the recent moves that we've seen in the Australian dollar, we'll look to review the advance above the 76 US cent handle and see whether we can sustain that and possibly push on to levels at that 77 US cent handle. After moving below 75 cents last week, the Australian dollar has rallied strongly as those Italian political tensions have eased, and we've seen strong macroeconomic data sets headlined by yesterday's retail sales read above the market consensus at 0.3%, and that leads us into expectations for a strong GDP print tomorrow. While we do have the RBA rate announcement on the cards today, we don't expect any action from the central bank, and we envisage that a 23rd month of interest rates at 1.5% will follow that market commentary. Instead, the main driver for the Australian dollar moving into the back half of this week will be tomorrow's GDP print. And if we can see a read around that 2.7, 2.8% mark on a year-on-year basis, that leads us to suggest that we've outstripped our main trading counterparts in the US, UK, Europe and Japan, and could lend us to some further outperformance for the value of the Australian dollar and test resistance at 76.80, 77 and 77 US cents. If, however, that read does surprise to the downside, then that could lead to a sharp sell-off in the value of the Australian dollar, given the recent upside and optimism that we've seen through the last 3 or 4 sessions. Looking ahead as well, of course, we have to weigh into account the risks that the upgrade or the changes in US trade policy pose. The introduction or removal, of the exemptions on aluminium and steel products do weigh heavily on key trading partners and perhaps could lend itself to further US dollar upside going forward. Of course, for more commentary though, you can always contact our dealing teams for advice.